In 2011, Rafat Ali launched Skift, a B2B publisher that covers the travel industry. At first, Skift was mainly monetized with advertising, but Rafat quickly realized that scaling a B2B niche outlet required a diverse set of business models that included memberships, research, events, and advertising. He also acquired multiple other media outlets that operated in adjacent industries. In an interview, Rafat walked us through this journey and explained how he managed to simplify the company's value proposition while embracing the complexity of multiple revenue models. We also spoke to Walter Frick, who ran the membership program for business publisher Quartz for nearly 3 years. He answered our questions about what motivates readers to convert into subscribers and what he learned when Quartz made the radical decision to completely remove its website paywall. Hello, I'm Simon Owens, and this is The Business of Content, the show about how publishers create, distribute, and monetize their digital content. If you want to listen to an audio version of this show, subscribe to The Business of Content wherever you get your podcasts. This interview was actually conducted as part of my live office hours series. Every month, I invite the world's most successful media operators onto a live Zoom call and let my audience pepper them with questions. There's only one way to join these calls, by becoming a subscriber to my newsletter. Go to simonowens.substack.com. That's simonowens.substack.com, or just Google the words Simon Owens and newsletter. Okay, let's jump into the interviews. With all that being said, let's jump into this week's episode. So I have two amazing guests this week who can kind of speak to different business models and niches within publishing. The first is Rafat Ali, sorry. He's the founder and CEO of Skift, which is a B2B publisher that covers the travel industry. And what I think is so fascinating about him is how much he thinks about revenue diversification and kind of sharing his learnings in real time on social media. Over the years, Skift has not only built out multiple business models that include memberships, like really in-depth research, events and advertising, but he's also been on an acquisition spree and has kind of acquired multiple like kind of small B2B outlets that are in like adjacent niches to his. And then the other featured guest is Walter Frick. Today, Walter has basically launched his own kind of newsletter startup called Non-Rival, and it's really cool. And he can talk a little bit about it when we get to him. It's basically like allows its readers to make predictions about upcoming events and then scores and gives them like ongoing points for how accurate they are at predicting the outcome of an upcoming event. But the main reason we're having him here is because for nearly 3 years he ran the membership program at Quartz, and so he's going to kind of talk us through what motivated readers to convert to subscribers and all the things he learned as they tested out different like membership initiatives like deep research reports, a paywall, and then I think near the end, by the time he left, they had removed the paywall completely. So we're going to kind of talk through all of that. So I want to start with Rafat. Can you first maybe just, I know I gave us a brief overview, but can you give us a little bit of a larger overview of what Skift is in terms of what kind of content it produces? Like how big is it? How big is your staff? Like just give us just a kind of very brief overview of like all the moving parts so we understand what it is.
Yeah, well, thank you for having me, Simon. And as I mentioned, I'm a fan and been reading your newsletter for a while, and I've also read your notes about your journey as well as an entrepreneur, so which I really appreciate. And I see some familiar names here, so hi folks. We're in year 11. Skift is the fastest way to understand and that was the pitch I had day one, was we're the Bloomberg of travel. So news, research, conferences, marketing services now for the global travel industry, which is a agglomeration of subsectors. And so they're trade publications that have existed forever in hotels and airlines and tourism and other parts of the travel industry. We came in 11 years ago with, believe it or not, a novel concept that we should merge all these things together. It was, as an outsider, it was very obvious that consumers don't care about these different subsectors. For them, it's all travel. And much like I saw in my previous career, on the silos collapsed in the media industry, in the finance and the tech world, in travel. They were collapsing because of globalization, digital, et cetera, et cetera. So that was a premise we came in with. We are now 11 years in, 80 people as a company. It was we have what I call Bootstrap Plus, meaning we've raised a little bit of money, about 3 million or so over early sort of angel seed round. I have a comically high 35 to 40 investors. Would not recommend this path to anybody else. It's just that I can manage. I've built a previous company before, so, and these are tiny investors in the sense dollar amounts are small. They're not basing their retirement on me giving them an exit.
Yeah.
I don't have a board as well. And so we are now a multifaceted global company. We really are global. I have to say, it is very much a function of travel, the industry itself, because it's such a global industry. It's hard to say, oh, I'm going to cover US and now finish with expanding into US. I'm going to expand into this country or this region. It sort of organically has happened. And that's the beautiful part of it, and that has itself a 24/7 newsroom company, etc. That we have, and all the cliches, which I'm sure we'll get into about COVID almost killed our business, reset our business, reset profitability, reset our culture, everything. We are a fully remote company now. We used to have an office in New York and London and Singapore, and we shut down all of those. And now we're a fully remote company with a good portion of folks in the US everywhere now. I've hired, I think, 2 people in New York since I restarted hiring in 2021, and we've hired like 40 people. And it's a dozen in UK now, 2 in Philippines, 6 in India, other parts of Europe, South Africa, etc.
Yeah. And so I like what you said about, like, raising 3 million. I think, I'm kind of on the record thinking that like massive VC raises always kind of, they give the media companies way too much rope and to where they're not, not able to find a product market fit because they don't need to for so long. And so, I'm always a huge advocate that if a media company is going to raise money, that it's really only in the few $1 million range, just so they can get the basic infrastructure in place and then grow sustainably from there. So that's really interesting that you've been able to grow so large with such a small investment. I think, like, one thing that you've, following you on Twitter and other places that you've talked a lot about is kind of this kind of struggle between creating like a very simple value proposition so they, that your readers and your audience understand what you do, but then also dealing with the complexities of having a multifaceted, multi-revenue stream company. Correct if I'm wrong. I think when you launched, you were very advertising focused, and I don't think you had a subscription product at first, right? And you've kind of, yeah, and you kind of like determined that was maybe a mistake. What can you talk about, like those early assumptions that you made that ended up being completely wrong about, business models?
Yeah, I mean, pretty much everything, honestly, as it happens with most companies. We had an idea that we would create a B2B2C company. The point being that we would start with industry news, and because travel is a consumer subject, that a lot of consumers, particularly avid travelers, are interested in, business travelers being a large lucrative category from an advertising perspective, that we would then do news you can use for travelers. Most people here probably may not paying that attention, but USA Today had a very good consumer travel franchise. They used to get millions of dollars of revenue. They've sort of lost that over the years, but that's a story of USA Today. So we said we'll create a modern version of USA Today, adjacent to the consumer side, to the B2B side, and just neither had the resource. I mean, honestly, didn't have the resources as we. That was too much to bite, and B2B itself, there was so much to do. It's my original love. It's what I've done in my previous careers as well, and so just focused on industry. We always had plans of adding other things to it. paid content. Maybe some of you remember my previous company was a blog that turned into a media company, had conferences and research as well. Just not this, it was small. By the time I sold, it was probably like $5 million revenue or something. And so we added research about 2 years in, and then conferences about the same time. And we started acquiring publications. I wouldn't call them companies because these were like 2 people publications. In 2018 was our first one, 2019 was our second, 2021 was our third, and we are announcing our new acquisition, our largest one, in like 3 weeks from now. So that'd be our fourth one. And we're actively looking. I mean, for us, and this, you hit upon a point, Simon, which was what I wrote was, I wish I had the simplicity of software. It's a single thing that scales, and I just have to optimize the company to that, versus B2B media, which is different than consumer media, where you really have to bring all business models along to sort of like herding cats. It's very rare to find a single business revenue stream that's scaled beyond a certain point in B2B media. Mainly because one is just the structure of how the pockets of money lie, and also because the audience you're serving has different needs in different parts of their job. So some of it is new, some of it is they're looking for data or research to make decisions, and some of it they want face-to-face meetings so that they can do business or deals or whatever else they can do, learn. So it just is, in our daily professional lives, we are multifaceted personalities with multifaceted needs to be better at our work. Our business is a reflection of that multifaceted need. If all they needed to read was news to be best at their job, that's all we would do.
Yeah.
But that's not how these people operate.
And then also, like, talking about the multifaceted needs, you've also said that like certain business models you need for economic boom times versus during, downturn. So what business models tend to be better for when the economy is growing very quickly, when your industry sector is doing well, versus what business models are important for when you kind of have to batten down the hatches and make your way through it?
Yeah, I mean, it's what you would assume the answer is. The answer is in boom times, advertising and events do very well, and in worse times, subscriptions just do a lot better. Except if all of your industry has been laid off and there's nobody on the other side to subscribe to it. So we saw this as part of COVID, where obviously travel industry was hurt really badly. But also on the corporate level, they laid off so many people. So in airlines, this happened where a lot of layoffs were on the corporate side. They couldn't lay off the frontline employees because they had a deal with the government to not lay off. And that's how they got these rescue packages. And so Airline Weekly, which was our subscription newsletter, which was our first acquisition we did in 2018, is a subscription newsletter. You would think, oh, subscription is more resilient. It would be if somebody was on the other end to subscribe. But if everybody has been laid off, who's going to subscribe? So that was a struggle. And now it's back. It's not the fastest growing part of business, but it's back.
Yeah.
And so our business prior to the pandemic, subscriptions was 17 to 20% of our business. Now 20% max. Now last year, 2022 was 30% of our business.
Yeah.
So, it's up 10%, which is a large number. And so my goal, really, my first pitch deck had, I want one third revenue stream, 1/3 being advertising, 1/3 being events, 1/3 being subscriptions. We're there. It took 11 years for us to be there, and COVID to reset the business for us to be there. This year, the events have come roaring back. I mean, our global forum is our flagship one. It's year 10. It happens in New York. It's, I would humbly say, the most prestigious conference in the global travel industry today. All the big CEOs are there. The tickets are selling so well. Like, I can't believe this is, this is happening. Type ticket sales for it.
Ernie, you had a question.
Yes, I did. So one of the things that I think is really interesting based on watching your business over the last decade is, I spent a lot of time in the B2B space as well, and I'm kind of wondering your thoughts on how the B2B customer has shifted over that time, as well as given that you've had all this experience, working in this space and coming up with all these business models. For somebody trying to get into this business today, working with B2B customers, what advice would you give them?
Yeah, everybody, this will sound glib, but this is really the crux of it. Everybody wants something custom. And it's a lot of freaking work creating custom for everything. And we see this directly in advertising. So in my previous company, we were able to sell newsletter only sponsorships, like stuff that you would already be creating and you would want sponsors attached to it. Now, those are small dollars and don't really bring tons of money for us. It's a client that wants a custom report on, I'm going to make it up, innovations in hospitality management systems, and they want their name on it, and they want to distribute it through our channels and their own channels as well. So then it's our branded content unit that would create custom work for them. So everybody wants something unique these days. From a client side, of course, I understand that. Why wouldn't, if I'm paying you big money, why wouldn't I want the best, most custom, most creative thing that I can get out of you, versus slap my name on this newsletter and maybe people read it, maybe people won't. With all the added complications of email these days, which we can get into. And then understand, this is the thing you learn over a period of time, because obviously we didn't know the travel industry at all when we entered it. And it's not a single industry, as all of you, I mentioned, it's different industries within one sector, within this large umbrella. And so where does the money lie in tourism? It's not the money. So for us, the money is not coming, because tourism essentially is destinations trying to market themselves. So they do consumer media, right? They will spend money in consumer media. For us, the money is, you would think, oh, is there a B2B version of that budget that they would spend with us? Answer is no. You would need to know that they are also trying to attract business meetings to their destinations. So then you got to figure out who the convention and visitor bureau is, and then you would talk to them. So then I need to have in my audience meeting planners for associations or large companies that organize events or event companies, etc. And so unfortunately, it's hand-to-hand combat we're talking about, versus spray and pray that even 15 years ago you sort of could pull off in general. Sure, there's an element of spray and pray that comes with the package. So I don't know if that answers your question. It's just everybody wants everything custom.
So like, 15 years ago, there was only like a few markets where they could really advertise, because there were only a few B2B publishers, usually like kind of more old school. But what you're saying is, because there are so many more traditional marketing channels that they have now, whether it's LinkedIn or Twitter or like where they could buy like promoted content and stuff like that, highly targeted. If they're going to go to a small media company, what they're really going to want is, they're going to want something custom that's like high value original content, because if they just wanted traditional advertising, there's lots of other places.
And also generally companies are a lot more savvy about content marketing, meaning they've learned, here's the thing that works, here's things that doesn't work. Here's the value of original content. Here's the value of original thought. versus sort of just blatant sales pitches. And so I think companies are more sophisticated now. We see this as a global company, so you see the sophistication in US, little less in Europe. So you have to sort of build that. Now we're expanding our business in India. So we are, and Middle East. And so we are in an education phase in India to say B2B thought leadership works versus having a very transactional lead-based mentality that they've historically had. So I don't know if we'll succeed. It's still very early, so I don't know. But we're betting on it.
So one of the things that you offer, so you have like two different kinds of subscriptions. You have like a traditional kind of like membership type subscription, but then you also have like a more expensive research subscription.
Right.
I guess before I get to David, who had a question about how you make those research reports, why did you split that into two separate subscriptions? Like, is that two different audiences that are becoming like a subscriber to the lower price membership versus the research reports?
That's a good question. If I were to start it all over again, I would do like an Amazon Prime thing, single thing, and everything else gets bundled into it, and I keep increasing the price of Amazon Prime. But also the audiences are different. I mean, the other answer is that what is needed in the short-term rental industry has absolutely zero overlap with what's needed in the airline industry. Like two completely, absolutely separate sectors that are travel from a consumer point of view, but have different needs. So we have a separate subscription service for the short-term rental sector. And there's a little bit of historical thing here, which is that our first subscription service was research. And then that built into a multi-million-dollar business for us. And I want additional revenue, so I need to build a new subscription service on top of it. What you're talking about, just for those of you who are confused. So we have our research service, which I can explain. We have research. We have now 6 research analysts, soon to be 7, separate from the editorial team, which is about 12, 13, 14 people. But we started research service really early on in 2014. And our Skift Pro, which is our daily news, which used to be free, is now a metered model. So during pandemic, we had decided pre-pandemic, we just happened to postpone it because the industry didn't have money to pay for subscriptions at that point. So we launched it in July 2020, 3 articles a month free, and after that you have to pay. So that's become another now sort of $1 million+ type revenue stream for us over the year. So now we bundle in, and the majority of our subscription revenue is enterprise sales, not online sales.
So you have like an actual salesperson that's calling up large travel organizations and selling them like multiple seats, multiple licenses to a single subscription.
All right. We have four salespeople just focused on subscription sales.
Mm-hmm.
And so I say that 30% of our revenue. It's it's many millions of dollars. And so it's Booking.com, Marriott, etc., that are paying $50,000 to $75,000 a year for access to everything under the umbrella, except for, like, for instance, Marriott doesn't care about airlines, so they don't have airlines, but they have research, they have Pro, we also bought this newsletter called Daily Lodging Report 2021, 28-year-old storied newsletter in the hotel owner investor space. So it's a sort of a specific sub niche within all of hotels. And so now they want that. So we're able to buy these things and then bundle them in. I'm happy to talk about our strategy there, where we somehow have specialized in buying husband-wife publications. It just randomly has happened. And then we modernize the tech stack, the design, the marketing stack, etc., and then build typically a conference on top of it. That's what we did with Airline Weekly. We did with Skift Meetings, which used to be called something else, and we rebranded to Skift Meetings. And then Daily Lodging Report, we haven't launched a conference. Actually, we have a lodging conference. It's not directly related to it, but it just happens to be within the Skift umbrella.
David, you had a question about how he chooses topics for research reports.
Yeah, so that's my question. How do you choose what to publish specifically for like the research? And I think maybe more in line with your strategy is how do you choose what to acquire?
Yeah. So research, we have a head of research. Now we have 10 years of history in research. So we have our enterprise subscribers, probably 24 that pay us that amount of money a year. We have them in mind because if it's all hospitality, primarily hospitality and online travel, which is what it is, primarily on hospitality and online travel and some destinations, then we have to cater to their needs. What are they interested in? And so they're interested in hotel. And so a good portion of our research, majority of our research output would be hotel related and online travel related. Online travel, I mean the booking.coms and the Expedias and the Airbnbs now as well. Because a lot of these hotels are sold through these channels. And so that's the biggest nexus that we focus on. And then consumer behavior, which is evergreen across all sectors. People want to know how our business travelers thinking about, or how our Indian travelers thinking about traveling. So that appeals to every sector. So it's a mix of those. And then we pepper in some forward-looking topics that may not be the most concrete. For instance, we did the first ever research report on AI and travel, like 3 months into GPT launching. And so we did some market sizing. Is it accurate? Probably not, but at least we're the first ones to put some rigor into saying this could be disrupted, this many $1 billion could be lost, these many $1 billion could be gained. So we do put a lot of effort into being first, and I'm happy to talk about this if it matters in everything, just because then people associate you with being on the cutting edge on things. And so while it may seem like silly to chase the tail on being first when, you know, the value of, for instance, exclusive is last seconds or short time, it does. This is what the information has done very well to build their business, which is they're known for the first place, being on the cutting edge. So anyway, on the M&A, I now have a corp dev person. He's not full-time. He's actually on our research team. He happens to be ex JP Morgan analyst. So he understands sort of finance very well and understands business models and things like that. This is what he does in his full-time analyst role. So he gives me 1 day a week. These days it's more because we're closing this acquisition. And he and I and our CFO, we work on these acquisitions. These are, again, in the scheme of things, these aren't giant acquisitions. Now, this one that we're closing is a few $1 million in revenue, will be our largest one that will add to our business. And we look at a few variables. One, how much bigger dollars can we, if it's an advertising-based business, that is subscaled, meaning they're not asking for big enough dollars from the sponsors. Can we come in and upscale them and ask for bigger dollars from sponsors? Just because of the heft of what we can do, and honestly, just because we can as a company. If it's a subscription business, then we look at, okay, what can we do to increase the price, increase the value, and what can you build on top of it that will increase the business? You talk to 10 people, 1 works out, 9 don't. This is true in all M&A anywhere. And we can't, and we're all funding through our own balance sheet, so we can only afford so much. I'm not looking to raise money to acquire something big that beyond our means. So typically subscaled publications are our specialty. And these people are doing not just, in many cases, these people are managing their business, everything around their businesses. So like they're like individual entrepreneurs so we take a lot of things off their plate. So they're happy to so that helps in terms of valuation, and typically our deals are structured where we pay them some upfront cash, some stock, and then some future payments. So typically 1/3, 1/3, 1/3. That's just a rough guide. 1/3, 1/3, 1/3 is how we structure it. And we're able to afford it because the payments are then over a period of like, I don't know, 3 years or something. So that helps quite a bit.
Yeah. Sorry, I'm just looking kind of through the questions here. In terms of just like Alistair was asking about the kind of valuations of the companies that you're acquiring, like, is it based entirely on revenue, or how much you feel like you can scale based? Because like, I know that with Airline Weekly, it was just like, I think it was just like one guy.
It was one guy started, but two others that transition out. This was all planned, obviously.
Mm-hmm.
And with Daily Dodging Report, it's an actual husband-wife team.
Yeah.
What used to be called Event MB was also husband-wife team. They've since left, and now it's called Skift Meetings, and we have a team of 5 or 6 people on it, honestly. That did really well for us. Sorry, the question is?
So it's just like, are you valuing it based on their current revenue, or, given that you have way more resources and marketing heft and a sales team, are you like, how much are you always assuming, because it's just a very small bootstrap team, and if you have like your resources behind it, that your way of valuing it is that it's undervalued, or you need to unleash its
100%
potential.
As a buyer, you always value them on their previous revenue. You never, that's most beneficial to me in terms of the lowest valuation I can potentially do. You never want to cram down people. It just never works. So you may not get their full hopes and dreams, but you don't want them to be crushed coming in.
Yeah.
So you sort of land somewhere in the middle. And that's how we see it. In our own projections, of course, we are all hoping it to grow. Like, I would not buy anything that is so mature that it's not going to grow from there. We have looked at some of those businesses. Honestly, we've looked at so many businesses, but anytime there's print in it, it's out of the window for us. Like, we will not consider print under any circumstance. Any circumstance. They must be the most profitable company in the planet in print. We will not look at print. It's not an expertise we have. Neither do I want to get into the complexity of it. And eventually, when we sell, everybody I've spoken to, everybody, bankers, etc., they immediately bring down the value of print you have to zero, no matter what. And so I'm just not going to buy or build print assets. And so we went down the path quite far with some other company that had a print magazine and just pulled the plug on it.
Okay. So I need to transition over to Walter. I know there are several more people who had questions. Rafat, if you do feel comfortable, could you leave and only, no pressure, but if you feel comfortable, you can leave your email address in
of course. Yeah, most people know how to reach me. I mean, it's very easy. People, I'm very easy to get to. I'm very visible on social media, as you know. But it's ra@skift.com. And I'm happy to answer people's emails.
Okay, ra@skift.com. I'm going to throw that in the chat right there. Thank you so much, Rafat. You're, of course, welcome to stick around for our final 20 minutes or so, but I wanted to switch over to Walter. Walter, so you oversaw memberships at Quartz. Obviously, Quartz has had a bumpy ride and has had a recent acquisition, but most of that stuff happened after you left. But it was a fascinating publication to watch, from, its original launch under the banner of The Atlantic, then, its acquisition, and then it going completely independent. And then, of course, it was acquired once again. You, as running its memberships, I during your tenure there, I think it went through several iterations. One where it was kind of most of the stuff on the website was completely free, but it was kind of the memberships were paying for these like weekly deep dive research reports. And then I remember there was like a more of a lockdown of the web content, putting more of the actual day-to-day web content behind some kind of paywall. And then you completely removed the paywall completely, and just the only like subscriber only benefits were the newsletters themselves. Like you had some subscriber only newsletters. Can you kind of like walk us through kind of the different experiments you were going and the insights that you were seeing as running memberships that caused you to try out these different ways to get people to convert and subscribe?
Yeah, sure. Thanks for having me, and happy to talk about any of it, including aspects that didn't work in retrospect. So I joined Quartz in 2019, coming from Harvard Business Review, which obviously has its own successful subscription business. And was at Quartz until I guess mid 2022, a little after the Geo sale. When I joined, membership I think was a little under a year old, maybe 9 months old. There was a weekly deep dive set of sort of feature articles, long by Quartz standards, called field guides. There were presentations like slide decks, sometimes tied to those same topics from the field guides. And then for a little while, there were also conference calls, which we cut, I think, first. And I'm happy to talk about why. And as you kind of suggested, there was a ton of iteration, some of it successful, some of it, a little bit searching. We grew from 0 to 27,000 paying subscribers at a list price of $100. Realistically, most people paying in the 50 to 80 range annually. But they could pay that monthly as well, which is a little higher, but that was the price point. We grew to about 27,000, started to plateau. When I joined, it was owned by Usabase, a public company based in Japan. So it had already been sold from the Atlantic. As you said, we were sold to the co-founder and CEO. So we were kind of independent for a while. And then I left shortly after we were sold to Geo. So there was tons that happened here. As you said, the paywall changed a lot. And I think the story is mostly it's really, really difficult to find product market fit for a subscription business when you're already a sort of medium-sized publication built to do something slightly different. And so I think we kind of were finding our way there with a product that was focused on kind of analytical journalism, focused on sort of trends in emerging industries. I think that was our sweet spot. We kind of were getting at that with the field guides, but they were way too much. No one was reading them all, and they took way too much effort to produce. And by the end, I think newsletter versions of those same products were kind of starting to get the closest that we got to, I think, a thing that could have been sustainable if we'd had a bit more time. But it was really difficult. Quartz was kind of in that, I think Digiday called it like the mushy middle. And I think that was a fair characterization of it had been designed to be like a competitor to The Economist. So like, not so broad that it's a complete generalist audience, but not just focused on a single industry or publication or industry or sector. And that was tough. And
Yeah.
Conference calls were like a good example of this. Like not only was the membership sort of small to start, it's fine to have a small conference call, but what do you talk about when the sort of set of potential topics is like all of business and financial news from the week? It's not as focused. And like this is a good example of a call that I think, has a real logic to it and works really well. And we struggled a bit with kind of the breadth of what we were covering and where we wanted to go down that road for membership.
Yeah. So like you talk about the mushy middle. So on the one end, you have like the Wall Street Journal and the Bloombergs of the world that have like a huge reporting force and are kind of must have subscriptions for a more kind of general interest public business subscription. And then you have on the other end, like publications like Skift, which are more niche. So you were kind of general interest, but you couldn't really compete with the Wall Street Journals of the world, but you weren't niche enough to compete with the Skifts of the world. And that was kind of the challenge that you were having. It sounds like.
That's right. And I think there's kind of two ways that could have gone. One is there's a version where we could have leaned into a few niches. And so like before I had gotten there, these things had already been tried and killed off. And I think kind of were mistimed, and had they come in the Substack era, things would have been different. But there was a time when there was a crypto newsletter an AI newsletter. I think there was just the tail end when I was there of a clean energy newsletter. One version is we could have tried to go after 2 or 3 of these niches and have them be kind of like the starting point. But I think the other thing and what we were trying to do is to be that second subscription. And that's just a really tough place to be. So like The Economist does it, The Atlantic does it in non-business, Harvard Business Review does it. It's not trying to be your kind of first main read of Bloomberg or the Wall Street Journal or the FT. There are places that succeed at it, but it's a really difficult spot in the market, to be going after.
Yeah. And then you said like with the deep dives, you were putting all this work into it, but it just seemed like people weren't reading it. And I think a lot of like newly launched B2B publishers, they have this idea like, okay, I'll trickle out some free content and then I'll just put out like one massive report a month. But like based on what you were seeing, especially maybe if it's within a niche that will work, but just kind of picking some random industry and putting a deep dive into it, like if you have a general interest audience, they're just not going to be interested in reading all that, is what you seem to be saying.
Yeah, I mean, I think there were narrow groups that were really interested and would find these reports to be worth paying for, and that led to some acquisition. But in some ways, it was kind of a false metric, because what we were really trying to offer, like our actual value proposition, was kind of more trend spotting for an informed business person across a wide range of topics. And so with that in mind, I think where we ended up, but just too late, with kind of short, sharp analytical newsletters that were trying to say, like, here's briefly what you need to know about this topic. I think that if we'd gotten to those newsletters first, maybe kept the presentations, but killed the longer features, I think that would have been a combo of kind of like short analysis, data, and charts. I'm not saying that would have been a home run, but I think if we'd gotten there faster, we would have been closer to where we needed to be.
And I interviewed Zach Seward, who was the CEO and co-founder of it a few years ago, and he said that people always overestimate how many subscriptions are business expense. Like you always think like, oh, people they'll just subscribe because it's not their money, it's their employer's money. But I'm guessing that did you? I mean, you didn't really see a lot of like expensed memberships. These were like individual people that were making this decision.
So for the most part, that's right. I think that was a huge liability. So I think I saw recently the FT is about 80% revenue coming from business payers. It makes a lot of sense. The FT is super expensive. I don't think we would have gotten to that level, but I think, and I don't know HBR's number off the top of my head, but HBR is, I think, a good example where, yes, some people pay as an investment in their own individual career, but there's a decent chunk of people who are reading it for work and putting it on their company account. And I think we would have done better if we could have gone a little further in that direction. But it's tough when it's that sort of second subscription, and when it's, if you think about like what people are really usually putting on that credit card, maybe like a general news business subscription, and then like a trade publication or equivalent for the vertical that they're most associated with. And being in the in-between is, I think, is tough in that regard. But the last point on that is just, while we had sort of some sense maybe from a survey here or there, I think there's also a lot that can be underestimated of like the change in type of data you need when you switch from an advertising business to a subscription business. And so things like knowing that kind of thing about your customers, or figuring out how you're going to get it via survey, it's really important. And if you have to wait a long time to get that kind of data, there's a lot of transition that I think it can seem easier to sort of switch to subscriptions than it actually is, because you need really good data to be able to actually build a solid subscription acquisition model.
And then I remember there was like a distinct point where the emphasis shifted from these research reports and a like website paywall to newsletters. Can you walk us through like what you were seeing that you thought that like newsletters were a better way to create like a paid subscription product around?
Yeah, so we felt like newsletters had already been a strength. The list that Quartz had was, not the biggest or anything like that, not a million, but several 100,000. So a very strong kind of email base and habitual users. And then we felt like, to the extent that we had found a real value proposition, it was in this kind of analytical trend spotting, data-driven journalism, but sort of switching that into a newsletter form we felt could help it go further. So we launched a series of newsletters. The weekend brief was a pre-existing version. It was a Saturday version of the daily brief. So we took that to to subscriber only. So basically you can get a news briefing every weekday, but if you want this sort of Saturday, like kind of sit back, make sense of this news of the week, that became a member benefit. And then we did a Monday newsletter called The Forecast, which was trying to basically do what field guides had been doing, the kind of more future-looking analysis, but doing it much, much shorter. So sharp under 1,000 words, kind of looking forward analysis. And then we did a company profile newsletter and then a service newsletter as well. And so there was different success. I think the weekend brief and the forecast were probably the two most successful of those four, but we launched with a package of basically 4 premium newsletters.
And like, what about like niche newsletters? Like David in the chat is asking about like, you know, if you had gone into like specific verticals and stuff like that, was there much experimentation to say like, okay, for the main website, this will be a general interest like business publication, but if like we're going to identify a few niches that we think people will pay for, we're going to hire a reporter. Like obviously your resources were limited, you were a small company and you don't have as much flexibility to hire like a bunch of people for a new experiment, but like do you think that would have been the better route to go?
I think that some of these things had been tried, and it really just is strange how timing can be so important to these things. And we see ideas now, you know, elements of blogging coming back, all these different things. The crypto and AI newsletters had been different in how they were designed, and they were gone basically by the time that Quartz membership started up. But I think those are both promising. Obviously, crypto has sort of gone through a lot of change in the last year. But honestly, I don't think that would have been a bad thing for a niche business along those lines. So either crypto and AI or some tech newsletter that was basically focused on those two. At the time we were doing it, I think those would have been very good. Clean tech was an area that we had some success with in terms of converting people to our field guides and getting people into some of our membership content. So I think that's an area we could have really focused on. And then the last one I think would be sort of streaming and the kind of entertainment business. We had a lot of success with field guides around that, but we never had a newsletter. I think way back in the day, Zach had like a blog on Quartz called Glass that was on this, but streaming was a real winner for us. And I think we could have had a pretty successful niche newsletter in that space. And it's tough because, you know, the economics would have been worse than, let's say, a solo Substack or just covering streaming. And so, you know, you can make the argument that that person would basically win out. But I think the idea would be if you have 3 or 4 of these newsletters and maybe 1 or 2 newsletters a week that are for everyone, like you could kind of design a package where a wide enough, you know, 100,000 people find at least one of the niche newsletters interesting and then subscribe to have full access to what Quartz is doing.
Yeah. And obviously Quartz was kind of handicapped because there was this paradigm shift of, you know, everybody thought that like it started during this era when we thought that the publications would achieve enough scale with free content alone, and you could find these premium audience. It's kind of like the theory that Rafat built originally was building Skift on, was that with these niche audiences through advertising alone, you could monetize high quality content. And then, but once that kind of era shifted towards subscriptions, Quartz was probably already in like a rocky setting in the sense that it was getting acquired. And then there was like, I think it was, if I remember correctly, under its new ownership, it was under a lot of pressure to start generating revenue. And then I think like the leadership left and the people who had been championing it were no longer there and all this kind of stuff. And then Zach bought it back. So there wasn't like a lot of free capital for you to invest in it. And I guess this is a long way of asking, like, if you did actually, let's say you had a fresh infusion of cash when you were there and you could actually invest in some of this stuff, what are the things you would have, if you had like a blank slate, how would you have steered Quartz to where you think it would have been successful? Would you need to have doubled in size so that you could properly staff some of these niches, or would you have niched down further? Like, what would your approach have been?
Yeah, I mean, I don't know, if you're starting, like, let's just say, you know, starting sort of from scratch or reimagining it instead of saying, you know, it's hard when you're at any given point. The decisions are so much tougher for the reasons you mentioned, and also just you already have people on board. But I think slightly smaller. I think basically, you know, you're not going to be able to compete with Bloomberg, Wall Street Journal, or even the FT. And I think the space that I still believe people are going to figure out is that thing that is bigger than one or two people writing a Substack, that is more analytical than Scoopy, although that is great too. But basically that is closer to that original vision of, Quartz has said, what if The Economist had been founded in whatever it was, 2012 or something, instead of in the 1800s. And I think that an analytical publication doing sort of really smart short form stuff, as Quartz did throughout its many years of existence, could have built a subscription business. It just was a lot harder when you're starting with a kind of advertising business, especially one that had been reliant on a lot of social media traffic. That type of stuff, the journalism was great and interesting, but it kind of rewarded maybe interestingness or even sort of delight a little bit more, which is great. But maybe that's kind of like for a subscription business, that kind of delight is like the icing on the cake. It's not the cake itself. I think for a subscription business, like it was tough for us to also pull over to like, okay, the type of analysis and the type of story selection we're doing has to be a little different to kind of say like, quit The Economist and subscribe to this instead. And that transition, I think if you're starting from scratch, you actually could do something pretty strong on that front. And I'll just say one last thing about the kind of timing of being there. For the most part, it was really difficult. Acquisitions, sales, there were big layoffs that were associated with the COVID recession and advertising and all that. But the other thing about COVID was that we got tons and tons of subscribers because that was a moment when the global economy was in massive flux and where people wanted a slightly more generalist, not just what is their individual trade publication saying, not just what is the latest news of the day, but people wanted to make sense of what was happening. That was a huge boom for Quartz in terms of doing this sort of analytical global economic coverage. And I think that actually is kind of the model for what you'd want to do if you were starting it from scratch today. Which I'll be waiting for the check, Simon, of you sending me that cash to try.
Well, last question on that is like right before it sold to Geo Media, it seemed to throw a Hail Mary in that it basically removed all its paywall stuff and kept most of its content for free, but it didn't eliminate its subscriptions. And I think the bet the Quartz was trying to make was, well, let's have unfettered growth on the audience side that we can monetize with advertising and hopefully build up some kind of goodwill to people would pay to subscribe, even though they weren't getting a lot of exclusive content. Does that goodwill type of strategy really work or scale at all, or was that just a complete Hail Mary?
Yeah, so it's really interesting. I think that there are models out there. There are types of publications where a sort of goodwill donor thing can work. I don't think it's for-profit business media. Like I think Quartz is a really great place that had a lot of super loyal readers who rightfully, I think, really respected and enjoyed what they were doing. Personally, I think that was not a model that was going to scale for Quartz. Like we're trying to be, a business publication that you're reading for business and tech analysis. Like that doesn't quite fit. That's not nonprofit news or ProPublica or something like that. That I think the sort of donor model works a bit better. So. Yeah, I don't think that would have maybe scaled up for Quartz, at least in the way that we were thinking about it at the time, or that I was thinking about it at the time.
Yeah, it seems so that model works for either like a small local news operation where it's like, give us money so that you can support your local news ecosystem, or a more mission-oriented organization that's like, has some kind of pet project or issue that they're advocating for, and your whole reason for supporting it is that you support that mission. And obviously a business-focused for-profit publication doesn't really meet either of those criteria.
And that's my view. But people disagree of like, Vox.com still sends emails about sort of like, look, we explain the news, we have no paywall, like, don't you want to support this? I wish them all the best. I enjoy the work that they do. So I think there are people out there trying to see if there are different models here. But yeah, my inclination, especially for business journalism, is that it's probably not the way that you're going to be able to succeed.
Yeah. Okay. Well, Walter, thank you so much for asking the questions or answering these questions. Rafat, thank you for joining us. We're coming up at the end of the session. I'm going to go ahead and stop the recording.